Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And I want to go through some up-to-date information about the housing market. I want to talk about this data in conjunction to my belief, or at least my lack of willingness to call a housing price decline. I know a lot of folks out there would love me to say that. The evidence last week about the surprising, or at least in my opinion, drop in the median home price to $389 when I expected $405. It gave great reason for a lot of the haters to come out and comment how wrong I am, how I should change my call immediately. And as I have shared in subsequent videos, that's not how I roll. I haven't changed my belief. I look at the information. I have my belief that we have entered phase 2 of the housing crash. Phase 1 was demand destruction. I believe that most YouTube channels understand demand destruction. Lots of YouTube channels talk about, hey, as interest rates rise, the buyer loses 10% of purchasing power. So it is giving reason for many, many channels to talk about a home price decline in the order of 40 or 50%. I am not one of those. And I know that irritates and frustrates lots of you. It's not what I believe. I'm sorry. The reason I don't believe that is because, unlike the other channels who focus on demand destruction, I know the other shoe is supply destruction. Supply destruction is very hard for novice investors, novice real estate gurus to talk about, because we haven't suffered supply destruction like this since the early 80s. Most of the channels talking about housing crash 2.0, 2008, frankly, weren't born in the they weren't born in 80 or 81. They're younger than that. I'm not saying that to be mean. I'm saying it as a fact. Going back and looking at historical information for times before you were born is difficult. You don't have context. You don't have information. So thankfully, I have that information. I was reading books. I've read books from the 80s and creative financing. And what we are entering right now is phase 2 of the housing crash in transaction. It is going to be messy. Statistics and metrics on either side are going to be messy because there's going to be such less transactions. Again, the housing crash, to catch you up, for me, phase 1 was demand destruction, collapse in transactions of 20 or 25%. That is over. At least, I mean, it's not stopping, but it's over. The big shoe is dropped. It gets worse from here, but the big shoe is dropped. What started on September 15th, so 2 weeks ago, basically 2 weeks ago, was now supply destruction. And as you will see in this Redfin article with data from the last 2 weeks, prices are up. Yes, folks, prices are up. I know there are some channels that want to continue saying that prices are going to crash. I don't think it's that simple. In an environment where there's going to be half the transactions, the data is going to be increasingly fluctuating. It's just less information. So let's bring up the article. Let's go through it together, word by word. And you can take from this what you will. So let me share it with you. So again, this is from Redfin. You know what I'll do is I'll actually cut and paste this. I will put this in the show notes so you can look for this. So this came out September 22nd. Tim Ellis. Excuse me, I might sneeze. Okay, I fought it off. The housing market update. Rising prices amid falling demand and supply. Folks, phase 2 of the housing crash is supply-led, and we haven't seen this for 40 years, so the data is going to be it's going to act different. It's going to surprise people. And we are now in a new weird. I think that's creative. So let's get into this word by word. Fewer people are choosing to buy homes. Yes, folks, that's phase 1 of the crash, with mortgage rates well above 6%. Even fewer homeowners want to sell. Folks, this is what I'm basing my opinion on. This is exactly phase two. If you have lower demand, but you have even lower supply, guess what happens? So here we go, folks. Home prices increased 1% in the last 2 weeks after falling for 11 weeks as rates soared past 6%. This is what I called, and I called it on September 15th. So starting September 15th or thereabout, prices started to go up because the supply is coming down. Again, we know this, right? The Fed did their thing, cooled home buying, reduces spending power, but new listings have taken a huge hit. This is what I'm calling. This is what I want you to look at. This is causing the data to be very convoluted. Typically, when rates shoot higher, we expect prices to turn down, but so few desirable homes are coming on the market. Buyers are not getting much relief. Yes, in some markets like Phoenix or Boise or Vegas, you know the markets, you're going to get some price degradation. But nationally speaking, prices are up in the last 2 weeks. Those who do choose to list have lost the upper hand. It is a buyer's market. That is one of the reasons sellers will not list. Sellers don't enjoy the same process as their neighbors in the spring. We have talked about this endlessly. The share of home prices with price drops reached a new high. Again, more and more reasons sellers will not list. This is just normal human psychology. I'm sorry. And I know some channels are not giving you this because they just want to say crash and make their money. There has been a lot of talk of a new normal, but what's happening in the housing market feels more like the new weird, Chief Economist Taylor Marr. The impact of the Fed's inflation curbing strategy is the clearest in the housing market as prospective buyers take a big step back, slowing sales. But since the vast majority of homeowners might consider moving, have a mortgage rate below current levels, there's very little supply hitting the market. Folks, this is what I've been calling. This is phase two of the housing crash. As a result, home prices have picked up in recent weeks, and the typical buyer's mortgage payment just a few pumpkin spice lattes from all-time highs. Supply destruction is not appreciated by housing crash channels. It is hard. It is unusual. It does not happen very often. I understand why they don't talk about it because it takes work to see it coming, which we did. The irony is that it may take a renewed fears of a recession to bring some relief to buyers in the form of lower prices. This is why you now hear me talking about March 15th. We are going to go through the winter, and home owners are not going to list. They will get to March and decide what to do. Next year, if we're in a big, deep recession, unemployment's 10%, rates are 9%, maybe we get some supply. We are not going to get the supply through the winter in enough numbers to move the needle. I am sorry. Leading indicators for the week, rates were up. They're actually up from here as well. Fewer people are searching to buy homes. Totally get it. Buyer demand down. What is this? Oh, showings are down. Purchase applications were up. Look at this. Mortgage applications were up 1% week on week. How about that? Key 400 market takeaway. Okay. Homes listing and sold. Median home price for sale was $371, up 8% year on year, up 1% since the beginning of the month. Up 1%. This is what this again is nationally speaking, the most recent information. This is all because of phase two of the housing crash is supply destruction. Supply destruction is not talked about, not understood. This is what I have been telling you is coming and why I have been hesitant and why I just don't believe we're going to have price degradation. I will revisit this in March and see where we are. Home prices are falling in some cities. We've talked about San Francisco, Oakland, and Honolulu. Now Buffalo joins the list. Oh, New Orleans. Woo, 10%. What happened in New Orleans? Wow, anybody invest in New Orleans? That feels like a typo to me. That might be 1%. Because New Orleans wasn't on the list last week and now is. That might be a typo. Anybody in New Orleans? Let me know. Median asking price for newly listed homes. Folks, look at this. Look at this. Asking prices up 9% year on year. Man, that's crazy. Mortgage payments are up. We know that, and they're going to go higher. Affordability is going to be a record low if it's not already. Pending home sales down 21%. That's because there's no inventory, no demand. It's going to get worse. New listings, man, down 20%. New listings are down 20%. Active listings. This is a big one. This is what I saw coming. This is supply destruction. 1.5% and going to get worse. This is why I don't think prices are going to decline. The supply will not show up. Months of supply is going up. That's because demand is falling. 34% of homes went under contract. 23% of homes got offers in a week. Days on market. This is one that jumped. Remember in my call for the number last week, I wanted days on market to double. No, I wanted days on market to go up 50% from 14 to 21. Well, now they're at 29. This is good. We need days on market to go to 40, 50, 60. 33% of homes sold before above list price. Man, still, woo. 33% of homes went on above list price. Crazy. 7.4% had price drops, but again, that means nothing. We don't know about wish pricing and all of that. Sale ratio broke 100%. It's now 99.4. Now the graphs, I think. Look at that. Median sale price. Take that, crash channels. Man, all these crash channels and people were blowing me up saying, Michael, how can you look at that chart and not say price is going to go down? Well, because I don't believe it. And look at that. I called it. This is what I believed would happen. Now, again, I don't believe this keeps going up. I'm not saying we're going to revisit these peaks. I want this to flatten out. We have demand destruction and are starting to have supply destruction. I want to be clear. I'm not calling for a 10, 20% run, but I did call this, and there was so much heat and hate that I got because people said, how can you be an expert? You don't understand how to read a chart. Well, buddy, I can see the future. And there you go. This is because we have supply destruction and all those crash channels don't understand. Even more, median asking price up. Folks, supply destruction at its finest. Again, this is why I didn't call pricing crash and all the others stuck to it. They don't understand what is coming. This is terrible. Home affordability is going to be the worst ever. We are going to have record low unaffordability. This is not good. This is why we're going to have so few transactions. Pending home sales. This is going to go lower. Pending home sales going to go lower. The market is stuck in the mud. We're going to break 4 million annualized sales sometime in the next 5 or 6 months. It is not, the housing market is not well. It is broken. New listings down. Listings down and going lower. Sorry. Active listings down. Again, the housing crash channels beat me up. They looked at the price and then they looked at the inventory and go, Michael, what are you doing? You're an idiot. You're a moron. Prices are down. Inventory is up. Not so fast. That's not what I saw coming. This rollover here, folks, is phase 2 of the housing crash. It is now supply destruction. I got to tell you, I feel pretty good that this data came out because this is exactly what I thought was coming. And man, did I take some heat. Days or rolling months of supply. This is going to go up. This is going to go way, way, way up. It's going to go to 4.5, 5 months of supply. Pending sales under contract within 2 weeks. Guess what, folks? This is going to go up too because supply is going to go down. So it's going to go up artificially. 23% of homes under contract within 1 week. This is going to go up also because supply destruction. This is what the crash channels don't get. I'm sorry. Homes sold for median of 29 days. This is going to go up. Sorry. 33% of homes sold above list price. This probably goes down. But again, we're going to have supply destruction. So a percentage is, it's going to be less homes, but percentage wise. Price drops. This is going to go up as well. But again, remember, supply is going down. So artificially, percentage goes up. This probably goes down too. But again, this is why sellers won't sell. I don't really know what this chart's telling me, so I won't pretend. So in the end, folks, to all the crash callers that don't understand that we are in phase 2 of supply destruction, prices are up. Take that. And then inventory. This is the big one. I've said many times, the thing to watch going forward is going to be inventory or active listings, I unfortunately think this line is going down. I think it's all about active listings, and then price and days on market are just extras. So in the end, folks, I stand by my call. I think housing is going to be rather boring, at least on the percentage basis. I don't see a epic home price crash. In fact, home prices are up the last 2 weeks. I do not call for a continued increase by any stretch. But this is why I stood my ground. I understand that listings exploded. I understand median price was down for a minute. But what I saw coming and other channels didn't was supply destruction, and what supply destruction would do to price and active listings. So again, hopefully you enjoyed that. I will link the article to this video so you can go see it yourself and read it and internalize it. But yeah, pretty crazy to think about that. What I saw coming actually is already transpired. I talked about September 15th being the date. It happened almost right on September 15th. So pretty cool stuff. All right, everybody, take care, like, subscribe, and of course, have a wonderful day.